Hey, what's going on, guys? Today I want to talk about SCHD. It's Schwab's U.S. Dividend Equity ETF. It's a very popular one out there. So let's go ahead and dive into it. So I'll leave a link to this calculator we just created on our website in the description below so you guys can check that out. But yeah, let's go ahead and dive into it. So it's one of the most popular U.S. dividend ETF in today's market. The ETF is developed and maintained by Charles Schwab, and the fund consists of more than 100 US based companies that pay a healthy dividend yield. Their focus is on large cap stocks. The fund was started back in 2011. So let's go ahead and create some illustrations here. Let's say you have $100 shares, so it's right around $7,600. You can expect payments estimated of around $64 a quarter and $256 a year. So the annual dividend is right at $2.56 with a current yield of 3.38% as of this morning, January 6th. Here are some of the top 10 holdings as of September. Since this ETF does change a little bit, you're going to have to go and check that whenever you watch this video. But as of now, these are the top 10, or as of September 30th, these are the top 10 holdings. Merck, right at 4.32%. Pfizer at 4.14%. PepsiCo at 4.11%. Texas Instrument at 4.07%. IBM 4.06, Home Depot 4.05, Verizon 4.03, Amgen at 4.02, Coca-Cola 3.92, and Cisco at 3.88. And their top 10 holdings make up around 40.60% of the overall portfolio. Scrolling down a little bit, so this is some illustrations, just a quick little table I created. So obviously you're going to get the dividend, but whenever you purchase ETF and stocks, you have the ability to leverage that with covered calls. That may not be your strategy and you may not want to implement that, but I just wanted to make that available here. So at $15,000, you could sell one, but you're pretty close to being able to sell two because remember, once again, every 100 shares, you can sell a covered call against. This one, you have three. Oh, I need to update that. That should be three. This should be 6, 13, 32, 65 covered calls, and 131 covered calls. So, the dividends are going to be nice. If you have $1 million portfolio, you're going to make estimated around $33,000 based upon the current yield. But you can also enhance that with covered calls. If you don't know what a covered call is and you're a complete beginner, definitely do some own research because, selling covered calls does cap your upside. So there are cons to selling covered calls. But, if you want to sell, something way out of the money that you're comfortable with selling your shares away at, then yeah, fine. Covered calls can be great and can be a great way to enhance your yield. You're sitting at 3.38%. But if you collect 2 or 3% additionally from covered calls, now you're looking at a 5 or 6% yield on your money. So a lot of people do that. If you're new to that idea, definitely go do your own research, buy a book, watch some more YouTube videos on covered calls because I think, if managed properly, they can be a pretty good strategy to know how to use. And ultimately just increase more yield on your portfolio. I'm not sure about SCHD. I'll have to look it up as far as like how much volume it has and like whether it's a weekly, you can sell them weekly or if they're just monthly. I'll have to do another video on that. Coming down to the dividend history, it's only been right at 11, 12 years since the inception date. But last year, they increased their dividend by 13.9%. The year before that, 10.88%. And then, the list goes on. So, looks like there's a lot of dividend growth opportunity here. So, that's another big thing I like to see in my investments. Companies, ETFs that are continually growing their dividend each year, year after year. Because, inflation is definitely a big topic, especially in today's time. So knowing how to increase your income more than 2% every year is very important. So do keep that in mind. And then some frequently asked questions, just how often do they pay? They pay quarterly. Are the dividends taxed or are they ordinary or qualified? We're not tax professionals here, but from our experience, most of these stocks are, most of them are just ordinary companies. Like they're not REITs or anything. So, I imagine as long as you hold, the ETF, I think it's at least 90 days. Don't quote me on that, but you have to hold an investment for, I think it's 90 days before the dividends can be considered qualified. And the big thing with that is qualified, you're going to, it's a lower tax, right? Because ordinary is just your regular ordinary income tax. And if it's a qualified dividend, that's why people like dividends, because it can be anywhere between zero. Like if you make less than $80,000 as a married couple in 2022, I'm not sure if it changed in 2023, but in 2022, if you made $80,000 as a couple and your income would be zero, or the qualified dividend income rate would be 0%. So that's kind of, big. You'd be paying zero taxes if they're 100% qualified. Now, however, there is some turnover. It looks like Schwab does do, 15% turnover on their holdings every year. But just strictly on the dividends, you're not going to pay taxes on that. Now, I think if an individual makes less than $40,000, once again, guys, don't quote me on this, but if an individual makes less than $40,000 per year, then the same idea would apply. You'd pay 0% qualified on 0% tax on qualified dividends. So, yeah, do some more research on that, qualified versus ordinary. I might make another video just kind of briefly talking about the two. Not a tax professional here, so I can't give a whole lot of guidance, but I can give you some articles to do your own research on. That's pretty much what I've learned and what I've found out. So pretty cool there. Is Schwab actively managed? It is not. It's passively managed with emphasis on large cap value. When do they pay? They pay out on March, June, September, and December. And is SCH dividend safe? I personally think it is 100% safe because it's an ETF. It's not one company. It consists of over 100 different stocks in this ETF. So as far as the dividend being safe, you're more diversified. So, not everything is guaranteed. So there is some risk with it. Like, for example, this could, go down dramatically in 2023 or in the future. It might not grow as much, but with being diversified among 100 stocks, it's probably pretty rare that all of them would cut their dividend. It is possible, if we go into a very bad recession or something, dramatically happens, that is possible. So is it safe? I believe so. And, I feel comfortable putting money into it. Just because, once again, it's ETF. It's not an individual company. It's not like you're putting all your money in Pfizer or Pepsi, because they could easily, if their company outlook turns negative and they want to change their company structure, they could easily cut their dividend and not think twice about it. But 100 stocks doing it, I don't know. I'd probably say it's pretty rare. So that's why people like ETFs, because it's a passive way to invest. Schwab is paying right around 3%, 3.38% dividend yield. So if you want a little bit higher of a yield, it's a pretty healthy yield out in the market. I think SPY is like 1.6 or something like that. So yeah, it's a passive way to get dividends quarterly by investing into the stock market. You're focusing on large cap value stocks. But yeah, I think it could be a great ETF. Once again, do your own research with it. The growth of it's been pretty well. I'll add that to this page. I feel like that's definitely important to have on here. Just to add some more context. But yeah, other than that, I think that's it for this video, guys. I just wanted to quickly go over this new calculator we added to the site. and we're still just trying to build out the site, add some more resources, add some more content. So this could be a great resource that you could go to. I think we're going to actually add in like our small account challenge. We'll probably make a page where we're keeping progress on each page just so we can quickly reference all of them in one place. I know YouTube and other platforms can be hard to navigate, through a series or whatnot. But I'm going to try to add it on here so it's an easy thing to do as well. So, all right, guys, that's it for the video today. I hope you got some value from it. Definitely go check it out. Ticker symbol SCHD. Really cool ETF out there by Charles Schwab. Thanks for watching.